Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of November 4th, 2024. We've got a big week ahead with the presidential election on Tuesday, and then Fed Chair Jerome Powell speaks on interest rates Thursday and may likely make a cut. We're going to look at the different sectors, how they performed last week, and how they're doing year to date, what it looks like moving forward. And then we are going to jump into the trades that we have on and some of the best trades on the option trading platform. Before we get started, please hit that like and subscribe button down below. Also download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. All right, guys, so let's look at the SPX, which is the S&P 500 index, and we are down about 1.37 this week. This is the last 5 days, and down about 1.37%. We're at a PE now of about 20 price to earnings, so still a little bit above the historical averages. If we look at the different sectors, there's that 1.37 in the SP X, the S&P 500, and really communication services is the only sector that was up. Everything else was down, and you can see utilities were down big, tech and real estate were all down almost 3%. If we look at the calendar and the economic news, this week's major news. So Tuesday, November 5th, it doesn't have it listed here, but we've got the big election. So that's going to affect certain stocks as well, whether it be Harris or Trump that wins it. And we probably won't find out maybe until the end of the week, I suspect, but guess we'll see. And then Thursday, we've got the Fed Chair Powell press conference, and he's going to talk about interest rates and cutting rates. And then, just talking about last week, we had PCE numbers come out, 0.2 expected. They came out at 0.2. Core PCE 0.3, so everything was pretty much in line. Jobless claims were in line, but we still moved down last week. And then we've got on Thursday the Fed interest rate cut. There's a 98% chance right now that the Fed is going to cut a quarter point, so that's kind of baked in and expected, and I expect that as well. The fear and greed index right now is at 49, so because of that drop, people aren't so greedy. So, the market did a little bit of a pullback last week. So let's jump into the trades. We'll go through this pretty quick, but we've got oil first. This is the futures, and we're at 68, and I'm at the 64.63 in oil. I've got a put spread on, so I want it to move up. And you can see right here, if we go to curve mode and then analysis mode, and then you can see we're profitable all the way down here to the 63.68 basically, and we're at 68.92, and we've got 44 days left to go in this particular put spread. But anytime oil moves down like it has been, then I will throw on a put spread. I think the bottom is typically around 70. We're a little bit below that, so then I'll go long. And then if we get up to this area, 80 and above, then I'll bet against them, throw on a call spread. So that's just kind of how I trade oil. It's pretty much purely price based because there are so many factors considered. Everybody seems to get it wrong, and it's really hard to predict. So I kind of trade that on price mainly, and not too big, 1-2 contracts at most. AMD is one of my favorite trades. I'm going to be doing a video on covering AMD, so keep an eye out for that. But it's been doing real well for us this year. Let's see, just over the last 30 days, we've made $934 in AMD. And there we go. Just trading these options. And I've got two put spreads on right now, the 140, 130. We had a big move down. They had earnings come out on the 29th of October last week, and they beat earnings and still dropped. And mainly the reason was that the gaming revenue was down pretty big, I believe. But overall, AMD is doing great. So I just look at it as a buying opportunity. You can see the two spreads that I've got. I just need it to keep moving up, which I think it will. I'm long till 200 is my target over the next few months, and we're at 141 right now. And again, you can see profitable all the way down to around 140. So I'm still in the profit range, but I want in the next. I'm still hanging on. This one's got 13 days, the 140, 130, and then I've got one in December at 145, 135 as well. Uh, Avago, Broadcom, 168. All these tech stocks were kind of hit last week. So still in the range. I'm trading both sides. I'm still in November with only 13 days to expiration. And the reason that I am and I haven't rolled is because I haven't really been tested yet. And you can see we're still in that profit range. So my target's 180. So I expect it to move up here. So I'm going to stay and try to collect this remaining premium. You can see $189 in remaining premium, and we've already collected on this trade 111. So you can see we had a big, on this, that's 289. It's basically $300 that we collected up front, and we've already made 111 of it, and we're looking to make this 189. As long as we stay between that 160 and 200 range, we will collect the rest of this 189. And I like Broadcom to continue to go up. My target's 180, so we're a little bit below it. So I expect us to stay in this range, or I'm hoping we do. Coin is another one that we've done pretty well in this year, and just over the last 30 days, it's done really well. We've made $767 just over the last 30 days trading these spreads in Coin, and I was long, and then there was a move up. It's got earnings next week though, so you can see the IVR is pretty high. So the 7th, is earnings, November 7th, and you can see we're profitable all the way down to this 150 range. So we just need it to stay within this range. We've got both sides on. We're in good. I like where we're at on this trade, and then you can kind of see the chart. And this is my range right here that I want to stay between. So just have an $10 wide iron condor on. We've got $332 left to collect over the next 40 days in Coin. So I've already rolled out in November into December. DraftKings, we did a video on. Go back and check that one out. But this one's done really well for us. I think over the last year, we've made over $3,000. Yeah, $3,020 in DraftKings. So done really well for us. And I just do the poor man's covered call. So that's selling a deep in the money or buying a deep in the money leaps option, the 30 call, and then selling the 40 call against it and collecting monthly premium. And again, there's a video on that. Let me know if you're trading DraftKings, by the way. I think that's a great company, and they're going to continue to do well because states need tax revenue. They need revenue, and they can collect that through online gambling. Elf is another one. This was a Jim Cramer recommendation, and he's very hot on it. And I think he's kind of entertaining. He's wrong a lot of the time, but sometimes he's right. But I'll take what I watch and hear from him sometimes and just see if it makes sense for myself. And 90-80 put call spread is what I've got on, and I'm hoping it moves up. And you see, it can come way down here, and look at that chart. It's been up at over 200, 220, and it's a solid fundamentals. I believe. Let's see. Yeah, look at that. The revenue versus and net income, and then the balance sheet. That's assets and liabilities. They've increased, and the revenue's been increasing. So it's got great fundamentals, great chart because it's way oversold, and I believe it's going to continue to move up. And they're in health and beauty, so it's pretty recession. I don't think we're going to enter a recession at this point, but they are recession proof, I believe, as well. Gold is another one that I've got both sides on. Iron Condor, a $10 wide put credit spread and $10 wide call credit spread. in gold, and we have been staying right in between that range. We just need to stay in between that range, and then we collect the rest of that extrinsic, which is $334 in the next 48 days. And let's see. Yeah, it looks like I'm not trading gold miners. It's just gold right now. And then the next one that we've got on is Lennar. I just put that on last week, and yeah, we had to move down. And because of the interest rate cuts coming, I think Lennar's the home builders are going to do well going forward. So there was a drop, and then I took that as an opportunity to go ahead and throw on a put spread. And I kept it in November because we've got earnings in December, so it's going to be before earnings. I just need to stay above that 165 price range, so we've still got room, and it's already dropped. You can see just recently. So this is the Bollinger Band, and it's near the bottom of it. So I don't expect it to continue down. I just need it to stay above, and that's what we're looking for with Lennar. L3 Harris, great defense company. I've been trading both sides. We're at 247 right now. IVR is high at 73 and no earnings. Wow. So we've got 355 in extrinsic to collect in the next 48 days in L3. And I think in the last year we've done fairly well in it. Yeah, $1,400 over the last year that we've made trading L3. So I do like L3, and I just wanted to stay within that range where it is right now. And with the war going on in Ukraine still, and Russia, and you know, I think L3, we're going to continue to build our military, and I think they're going to continue to do well. Micron, we've got a 95.85 put credit spread. My target for Micron is much higher, and I just needed to stay above that put credit spread, and you can see it's been moving down, and I don't expect it to, you know, actually there's support way down here at 85, but I'm happy where we are now, 99. My target in Micron, so they do memory and storage, SSDs, and my target is 160, so quite a bit higher than where it is right now. And I've been doing mainly put credit spreads, but sometimes a poor man covered call as well. So I think that's a great trade right now. And then we've got NVIDIA on. I'm still in November, so 13 days. And we've already collected 93 on this, and we've got 136 left. At some point, I'll put on a trade in December. But what I like is you can see right here on the left, November 20th, after the bell, is earnings. This is this November, third week of November. Options every third Friday of the month are the regular option chain. And the options where there's more volume because most of the institutions would trade the regular option chains versus the weekly. So I'd like to try to stay in those. And what's nice is this expires before the earnings on the 20th. So I'm looking to collect this 136 as long as we just stay in between that range. And if we look at the chart, yeah, it's pretty solid uptrend, and we're right in the middle of that range. So, and NVIDIA is a great company. They're leading the AI way with their GPUs and graphics cards. So Oxy, Occidental Petroleum, big Buffett stock. We've got a 50 deep in the money call on and sold a 50 call against it. So poor man's covered call. And this is a Buffett stock, but way down. And oil, I think, is going to do great. IBR is 92. So I'm confident we're going to continue to do well in Oxy. I think over the last 30 days we're up a little bit. Yeah, 136 bucks, so not bad. And then the Qs, we're still in November. We need to stay between. We've got a $10 wide put credit spread and a $10 wide call credit spread. You can see I like to sell options for the most part because your probability of profit is much higher. And then the only time that I typically buy now is when I'm buying leaps options and they're further out because you don't get hit by the time decay. So we're in between 460 and 515. We're right in the middle of that profit range, and we've only got 13 days left. It's an ETF, so there's no earnings, and I expect the Qs we've already made 274. We've got 302 left in extrinsic on the Qs to collect, so that's nice. And I think just in the last 30 days we've made some money. Yeah, 274 bucks. So we're doing pretty good in the Qs right now. SoFi is another one. I know we've done well recently. There's been a big move up in SoFi. About time. It's taken long enough. But in the last 30 days, I think because it's moved up, we've done really well. We made a couple $1,000s in the last 30 days. So happy with that. We've got 10 on. I actually sold some recently. You can see, yeah, I've just been buying and selling on up and down days and made that 2,000 bucks. So I expect SoFi to continue. I'd like to keep at least around 10 of these deep in the money calls. So I like to go out more than a year. And I don't even trade the calls against it. I don't sell the calls against it like most, because the calls don't pay much. And I think the upside, I think SoFi can almost explode at any time. And I'm going to have a video coming out on that. So keep your eyes open for that one. And Tesla, we're right in the middle of the range at 248 to 300. And I think on Tesla, we've got no earnings coming out. But you can see the chart. We just need to stay in that range, and we're in the profit zone right now. So Tesla's a pretty good stock to trade because it's always got pretty good IVR. It looks like we're at 35 right now, but we've got no earnings coming up. So I like Tesla at this with this trade with an iron condor trading both sides. Ulta is another one, a Buffett stock that he's got. I'm still in November. Made 323. We've got 234 left in extrinsic in Ulta right now. And in, I think, the last couple of months, we've made 708 bucks. So we've done pretty well in Ulta as well over the last couple of months. We're right in the middle of that range. They've got earnings coming on December 5th. So that's why I haven't rolled. I'm going to stay right here. As long as we stay in that range, we collect the rest of that 234 bucks in the next 13 days. So this is where the time decay and this 234 will come in very quickly. And you can see right here, the theta, $20 per day basically is what we're going to get as long as we don't make a big move out of this range. And again, Ulta has been staying, a lot of the time right in between this range. So I like the chances there. Two more trades and that we've got on right now. We actually have quite a bit of cash on right now with the election coming. So, excuse me. We've got a VIX on, a deep in the money call that I bought, and that's just kind of protection for protection. I want to see how that goes if there is a big drop in the market, and see if that does move up and offer a hedge and some protection. We shall see. With it being that far out, I'm not sure exactly how much protection that's going to offer, but I suspect it's going to be pretty good protection, and then we can just sell it on a drop in the market. XOM is my last trade that I've got on, and we're right in that range between 115 and 130. We're at the bottom of the range right now, but we've done pretty well this year in XOM, and we're at 115. IVR is 44. Again, we're at the bottom end of the range, but we're still in the profit range. So I like ExxonMobil anywhere between 100 and 130. And right now my puts are almost being tested, but we're okay. So I'm still in November. If it does move down early next week, I'll just close out and roll to December with ExxonMobil. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Moomoo and Tasty Trade in the links below. Get your free stocks and benefits. And go ahead and make sure you comment. Let me know what you're trading. Ask a question. I answer everyone. Thanks for watching. I'll see you in the next video.